Hello guys, today is the 17th of August. It's been a while. I've been busy with some infrastructural work, so to speak. Hopefully we'll be able to present something interesting in the coming weeks. In the meantime, let's go back to the markets and let's discuss what's happening, and let us start with the economic releases of the previous week. Of the current week, I'm sorry, which is about to end. And the most important thing here is inflation. It's mixed, and my personal opinion is that it is leaning south a bit because some of inflation metrics are in line. For example, core inflation month on month is as it is expected, but core inflation year on year is not as is it is expected. We also see a divergence between expectations and actual results in rate year on year, not core inflation, but it's actually better. But at the same time, if we switch to producers price index, I'm sorry, which is basically inflation B2B, it's quite different from what was expected. And we also saw steady retail sales during the previous week, and consumer sentiment tapered a bit. And during the next week, we will see the most important market driver of them all, Fed speak. FOMC minutes will be released on Wednesday, and the week will be concluded by Fed Chair Powell's speech on Friday. So, what does this mean to the markets? The first thing to keep in mind is that we are still in this very large lockout rally, so to speak. Let me uh, use the daily chart. This was the peak of the tariff scare, and since that, everybody sort of became at peace with the whole situation, and we also saw that Trump's administration is not so radical about it. So we are nowadays we're routinely getting messages about the prolongation of the negotiation window, and there are few reasons for a correction here, in my opinion. So the first one we have already discussed here in the economic release part. And as you can see, inflation is still out there. And at the same time, the Chinese situation, while also being delayed, is still there too. So basically, in my opinion, this whole rally was a relief rally, and it was a rally of return to status quo, which uh, actually overextended itself quite a bit. And it is also being concluded by the index, which is the most responsible to inflation and Federal Reserve rate policy, namely Nasdaq. And you can see that in S&P 500, it's still relatively resilient, and it stays within this range, which was established starting established on August the 13th, and basically kept till August 15th. And MNQ is sort of already feeling it. It was moving in this narrow channel, and we're seeing that it is quite responsible when it touches the upper boundary of this channel, and this coincides well with the macroeconomic releases we saw during this week. And in this situation, the Federal Reserve release, namely the minutes on Wednesday, could be the catalyst to a broader correction. Because what really can you do to prop this market further? Uh, what 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 news can you sort of bring out of the hat? Chinese tariff situation resolution, that seems quite unlikely. To say uh, this whole tariff situation even got a bit more complicated because there is also India, and India is facing some tariffs in relation to the Russo-Ukrainian war and the purchase of Russian oil. So it could put some pressure and create some disruptions in the energy flows and in overall assurance of the market that everything will be eventually sorted out. So, as I've said, this lockout rally is long overdue, and personally, I think that some sort of correction is quite likely. It could be a pullback to a moving average, maybe a 20-day, maybe something more drastic, and we could consider this this new boundary of a trend. The trend could widen. But obviously, no crystal ball here. The main idea is that uh, at the moment we don't see any significant driver to keep pushing the markets to the upside. There is one contradiction here, which is strength in Russell, and these 2 days, namely the 12th of August and the 13th of August, were very, very powerful. And you can perceive these moves in small caps during 2 frames of reference, so to speak. The first one is good, and it basically tells us that the rally is broadening. Money, liquidity stops from flowing only to mega caps and the most trendy names, and uh, starts this more even distribution across the markets. This is the positive version. And the negative version is that at the end of each protracted uptrend, there is always a moment when the laggards sort of jump up to crash eventually. And this is one of the reliable indicators of market tops when the laggards, the companies which don't really have any significant drivers in this cycle, jump up. Obviously, the last rotation of capital before it jumps to the fence to observe from there. And also, we could take a look at the volatility index, and we see that it is very, very low, and it has this cyclic behavior where step-by-step corrections sort of preclude these jumps, and this one is a bit of a telling for me personally. And we also see weakness in gold. Gold was across my ideas, basically driven by a mix of technical and fundamental analysis, and it was a good consolidation. It even still has a chance of repairing itself. Maybe it could grind up, consolidate here, and break out from here. But Personally, in the light of the recent macroeconomic releases, that's not so likely. And I think that these FOMC minutes will show us not hawkish, but still uh, cautious, cautious Federal Reserve, cautious again, and that will be enough to start a correction. And gold, as well as cryptocurrencies, which we will discuss in a moment, is very sensible to rate policy. So, in my opinion, this weakness in gold, and also it's not only rates and inflation, it's also tariff manipulation, and it's getting harder, obviously, judging by this day, to stir up the demand for gold with tariff related news. And now we're seeing that it probably starts to price in mm, the higher for longer aspect of Federal Reserve policy. And this actually is one of the setups I'll be watching for the next week. This small range, which could be resolved to the downside, and we'll see how it goes from there. Actually, if you reverse the chart, it looks quite bullish to me. Quite bullish. Obviously, there are lots of stops here, but still looks very interesting. Silver is quite different, a bit mixed, and there could be another implications here, mostly stemming from reshoring of industry in the States. Silver is not only a store of value, it's being used in production quite a bit. So this one could sort of dilute the signal, the inflationary signal, and the Fed rate policy signal here. What else? Okay, so if you remember my previous videos, I was laying out this idea that this year and until the end of this year and a few years ahead, we will see a rebalancing of uh, of currency flows, and it seems to be not so obvious anymore, because obviously, sorry for the play of words. There are lots of problems outside the states too, and there are lots of problems in British economy and in Eurozone at large, Canada as well, which looks quite weak on this chart. But at the same time, it seems to me that we could see another move in this rebalancing capital. I wouldn't necessarily say that it will coincide with some breakthroughs in European Union related to policy, maybe helping somehow capital markets to become more accessible, supporting them with liquidity, and liberalizing their regulations, which could be quite stifling, as well as taxation policy. In my opinion, the current stage of the markets and the current stage of big economies is which one deteriorates the least will attract the most capital. And in this regard, we're getting mixed signals, and the situation sort of maintains status quo. So we could be preparing here for another leg up, and it could be quite significant. But you also should keep in mind that it is FX, and To trade this, you gotta trade it with futures, obviously. So yeah, could very well be another interesting move here. What I personally don't like in this Euro USD Euro situation is that it is hugging this 50-day. It is usually considered as not the best of technical signals here. So we'll see. Could be just testing it to break through to the downside, and this whole structure could be a wedge. But we'll see. As I've said, quite mixed and not a priority situation for me to exploit. And of them all, Euro is still the most interesting. So okay, and to keep our communication brief, let's take a look at the world of decentralized finance. What's notable this time is that clearly Ethereum was leading. You could even take a look at ETH BTC chart to see a clear breakout here and after the races. And we only saw one wave of price appreciation in Bitcoin, and we saw two in Ethereum here. And it also seems that the old adage of laggards marking jump in laggards marking the top of the cycle, which I mentioned before, it could very well be true here as well, because what did we see? As ETH was increasing in price, BTC actually was only approaching its recent highs, and it got a very significant distribution from here. And this actually is another situation which is quite similar to gold. And I think these guys are bound together, but by this higher for longer Fed situation. And store of value is at risk when there is no value to protect from drastically increased flow of money. So when increase in flow of money is being questioned, these guys take a break, and that's basically the situation here. What else? So this is one of the few actionable situations in this market, and let's take a brief look at stocks here. Obviously, you could. One of the reasons I went offline for such a long time was that I was revamping my methodology to accommodate more futures trading, which was the most beneficial for me during the previous year and this year too, actually, in Bitcoin. But stocks are still interesting, and with stocks, I want to wait till the moment when we will see a correction to trade growth again. But some things look quite good. For example, Webull here is okay, is quite okay. Pony AI is interesting too. I don't have anything to show here, but Chinese stocks overall look good, quite good, but maybe not the ones which are listed in the States. And I look at shorting this guy actually, ARM Holdings, one of the market darlings of the previous cycle, now in this sort of protracted consolidation move. And if it will correct, guys like this will get some pressure, that's for sure. So that's basically it for today. Thank you for tuning in, and let's be in touch.